Well, it's all about investing across a portfolio. We know this is a high risk asset class, so what we teach our angel investors is to build a portfolio over time, and what we're offering with this fund is an opportunity for a single ticket to have immediate diversification. So we're aiming for 8 to 12 businesses invested as part of this fund.
Hello, you're watching Proactive. Joining me in the studio today are Sarah Turner, CEO and co-founder of Angel Academy, as well as Tom Britton. He is the co-founder of Syndicate Room. Thank you both very much for coming in today.
Thank you for having us.
So, Sarah, you've just launched the first EIS fund dedicated to backing female-led startups. Before we get into that, tell us more about Angel Academy.
So Angel Academy is an angel network that I launched a little bit over 10 years ago. I'd spotted a gap in the market. Not only were female founders being overlooked, but there are very few female angel investors. So I thought there was an opportunity to mobilise more, really based on the hunch that women investors would be more inclined to back female founders. So we've been going just over 10 years now. We've just closed our 54th investment and we've backed them through over 100 different funding rounds. So we're really quite experienced as an angel network now, and it's high time for us to launch a fund.
So why is now the moment to launch this EIS fund?
Well, where do I start? Lots of reasons. It's about time. So we've now got a body of evidence that shows what happens when you sufficiently capitalise female founded businesses. Some of them can really scale quite massively, and we've got some in our portfolio that have done just that. It's a well-known fact that women are often given half the amount of investment, if anything at all. The statistics are still quite dire, but they tend to do twice as much with half as much. So we're still at a point where women-only founded businesses are receiving less than 2% of all venture capital invested. 86% still goes to male-founded businesses. Mixed gender teams get about 11 or 12%, but if you dig into the data, those mixed gender businesses, it's often a male CEO, so it's a man who's doing the fundraising as usual.
Tom, let's bring you in here. Tell us more about the role of Syndicate Room in this.
Yeah, so Syndicate Room is a business that runs both its own funds, so our Access EIS fund, as well as offering partners such as Angel Academy the opportunity to set up funds where we provide the framework and the administration of the fund, allowing them to focus on what they do best, which is picking and choosing potentially good investment opportunities. And that's what we're providing to Angel Academy.
And why do you want to partner with Angel Academy in this, Tom?
Well, I mean, Sarah and I have known each other for a while now. We shared being on the board of the UK Business Angel Association, and we've always talked about the lack of capital for female founders in particular. A while ago, there was the Alison Rose review, which was a good first step in getting people to acknowledge that there was a problem in providing capital to female founded businesses. But since the review, there hasn't been much action towards actually bringing more capitals into the business. A few years ago, 2 years ago, we decided we wanted to launch these partnered funds and provide the framework for businesses to run funds. And to be honest, Sarah, was probably the first or second call that I made. And I said, hey, look, we can do this now. Do you want to do a fund? And of course, she said, yes, absolutely. Let's talk about it. It's taken a little while to get there. Nothing to do with Sarah, but more for us, making sure our back end and other permissions were in place. But we've been rolling out these partnered funds for about 12 months. And we're now in a position to do more of them and launch the Angel Academy Fund.
Sarah, tell us more about the successes of Angel Academy and how you hope to replicate that in the fund.
So we've got several businesses in the portfolio are really doing quite well, full steam ahead. So Bare Fertility is one of them. We participated in their very first round at a relatively low valuation. We've participated in several rounds since. They've now just been granted FDA approval for their fertility device, which means they're full steam ahead, expanding into the US. But they've proved what they do and the effectiveness of their fertility device here in the UK market. So they're now valued at 5 or 6 times what we first invested in, but we're expecting them to take off like a rocket ship. So very excited.
They're actually one
about
that's
that.
in our portfolio as well. We co-invested with you in that one, so
Yes,
I'm excited
so
about that.
Lovely story, great founder. Really struggled, I think, to get meaningful sized rounds up till now. So we're very excited about the potential to help them raise a really big round to continue their growth journey in the US.
Will you be co-investing with other venture capital funds in this?
Absolutely. I think, when you look at the cap tables of most early stage businesses, they've got a range of different investors backing them, often starting with angels, then moving into VC funds. So Bare Fertility, who I mentioned, have had investment from Octopus Ventures and Jamjar investments here as well, others, Balderton. Absolutely. And then future fundraising will be investing alongside even bigger VCs as these companies kind of continue their growth journeys.
You're targeting a 3 times return over 10 years. That seems quite ambitious for early stage investing. How do you balance that ambition with the risk?
Well, it's all about investing across a portfolio. We know this is a high risk asset class, so what we teach our angel investors is to build a portfolio over time, and what we're offering with this fund is an opportunity for a single ticket to have immediate diversification. So we're aiming for 8 to 12 businesses invested as part of this fund.
Tom, tax benefits or tax relief provided by HMRC for investors going into EIS fund. Can you take us through that?
Yeah, so this fund is falling under the Enterprise Investment Scheme, the EIS scheme. And what that offers investors is the opportunity to claim approximately 30% of their investment back as income tax relief. So the minimum investment into this fund is £10,000. Of course, we take out the initial fees for the fund, and then whatever is left that gets deployed into companies, you multiply that by 30%, and you get to use that on your tax bill to reduce your income tax. Now, you also get a few other benefits through EIS. For any of the businesses that go bust, you can claim loss relief. You effectively take the amount that went into that company, less the income tax relief, and multiply it by your tax bracket, whether that's 45%, and you get that as tax relief that you can apply against income or capital gains. You also get tax-free capital gains on the investments that you hold for more than 3 years. So any of these companies, if you're holding on to the shares for 3 years and then they get an exit, you're not paying capital gains on the uplift in valuation from those particular companies. So it's quite a nice thing to have.
And how do retail investors access this fund, Tom?
Yeah, so they can invest into this fund. It is opening today, which is great to see. They can invest in it on syndicateroom.com. They have to register. Registration is free, and then there's a 24-hour cooling off period before they're able to invest, but they can do that. So register today, invest tomorrow if they want. Of course, it is a risky investment. We encourage everyone to read all the documents and take their time before they decide to invest. So register, download the IM, download the brochure, the key information document. If you have an advisor, speak to the advisor. If not, talk about it with people, because what tends to happen is the failures happen first, and for those who are new to it, they go, oh gosh, everything's going poorly. When in reality, the successes, they take a little bit longer. So you get the failures up front, and then the successes come year 7, 8, 9, 10. So a very different style of investment, but in short, you can do it online and then review everything. And if it's still right for you, go ahead and make the investment.
So once those investments have been made, Sarah, how do you plan to deploy the funds? Do you have a pipeline of opportunities at the moment?
We have a pipeline of opportunities, both from our existing portfolio that might be doing what we call follow-on rounds, but also new companies. So, we're an active, well-known angel group, so we receive significant deal flow. We've got a constant process of filtering and due diligence, and our angel network kind of actively diligencing those companies and investing their own money as well alongside the fund.
Just adding to that, one of the great things about the Angel Academy Network is not just the due diligence they do up front, but the support that they provide the companies after the investment. So it's not just deploying the funds and that being it. They do have a network that they can tap into, an incredible network of very experienced, very senior individuals who the companies can then reach out to should they need assistance with pretty much anything.
Yeah, absolutely. So a lot of them have been entrepreneurs themselves, or they're seasoned professionals. They've got some time and passion on their hands, so can provide some fantastic support. And I love working with them because they've personally invested, so they've got skin in the game as well. They're not mere paid advisors.
So I think, Tom, for viewers who've never invested in an EIS fund before, but they want the money to make an impact, anything else they should know before making that minimum investment?
Well, I'll reiterate the risk involved. It is very different to investing into a listed fund. It's also very illiquid. So once you've invested into an EIS, you can't get your money back by making a claim to the platform. You have to wait for the underlying companies to mature and achieve an exit through an IPO or a trade sale, or occasionally through a secondary sale of some of the shares. So when you're looking at this investment, just keep in mind that it's money that you should be able to lose, of course, because it could fail completely, even with the tax reliefs. And two, it's money that you're not going to need for a long time, because you should be thinking 7, 8, 9, 10 years before you start to see it back.
As angel investors, we think of it as our fund money. It's not money that we're going to need to call on now or at any point in the future, but we're very optimistic about the possibility of getting some very good returns from probably a relatively small number in the portfolio, but they'll more than make up for those early losses. But another point about impact is that actually a lot of the companies in our portfolio have got a social mission at the heart of what they're doing, not at the cost of potential financial returns. We want them to do well commercially as well, but Bare Fertility that I mentioned before is about improving fertility rates. It's access to a much cheaper and equally effective form of fertility help, and it compares very well to IVF, for example. We've got companies that are doing things around clean tech, so an agri-tech business that's helping with crop management without the use of pesticides. We've got an alternative proteins company that is very exciting and has some great co-investors in that business, and the list goes on.
Well, I hope you'll keep us updated on progress with the fund. Congratulations, and thank you both very much for coming in today.
Yeah, thank you.
Yes, it's been a pleasure.
Sarah Turner, the CEO and co-founder of Angel Academy, as well as Tom Britton, co-founder of Syndicate Room.